Yeah, thanks, Greg, and thank you all for attending. It's good to see and hear you online. So why are we doing this? It's an important initiative as far as the meat and livestock sector in particular is concerned, to help people think through how they can get operating cash, capital expenditure cash, and at a wider level, even think of lenders as being investors in their business. So last week we talked about some of the key principles that are behind becoming lender ready. This week, it would make complete sense to have somebody who's actually a lender, and in Vern's case, a commercial lender previously and now a Q-Rider representative, which he'll explain in a minute, to give us a sense of, if we stand in the shoes of a lender, what will their view be? So Vern, maybe a quick introduction from you, if that's okay.
Thank you, Gordon, and welcome everyone to today's session. So the Q-Rider, Queensland Rural and Industry Development Authority, is a professional administrator of government loans and grants for both state and federal schemes at different times. We have a regional representation across Queensland with 11 regional account managers, and our core lending products are the PIPES Primary Industry Productivity Enhancement Scheme, which encompasses first start loans and sustainability loans to get people either started into viable primary production enterprise and or increase the sustainability of those enterprises. We have 3 regional program delivery areas across the state, and I'm the regional manager of one of those regional teams. We also, from time to time, undertake disaster assistance lending, which is designed to get producers back up and running after a severe weather event similar to the monsoon trough event 2019. Myself, been involved in agriculture all my life, over 50 years, involved in rural finance for 30 odd years of that, and as Gordon alluded to, have a range of experience with a few commercial lenders, and I've been with Q-Rider for a bit over 2 years in various roles. So yeah, thank you, Gordon.
Yeah, thanks, Vern. So, Greg, are you happy for us to launch into the presentation from here on in?
Yes, absolutely. Go for your life.
Okay. So before we, I suppose, leave the point that Vern's made, many of the principles that we're talking about today are relevant to, I guess, your professional development. While Vern will be wearing pretty much that government organisation hat and drawing on his past experiences, for those people in other states, be aware that there are similar organisations to Q-Rider in other states, and we've also got that Regional Investment Corporation, which has got, call it a government set of loans as well. Okay, so let's get to the Lender Ready program, which is actually the context of what we're talking about here. For some years now, our company, in collaboration with Meat and Livestock Australia, the Queensland Government and AgForce, and a range of partners around Australia as well, have been running a business management program, the ABDI and MLA Business Management Program. It's actually focusing on better business management and professional development for people to think about business principles as opposed to production. We're working on the assumption that most people have got those production insights, but our experience, our research tells us that managing businesses better is a limitation and a concern for many people. So the first step in this process is a webinar program. Last week, we talked about becoming lender ready. So some of those key principles that I've noted already. This week, we're talking about putting ourselves in the lender's shoes. Next week, we'll actually be talking to one of our clients who we've been through a very interesting experience acquiring a significant amount of money through a somewhat convoluted process. And so I'll be bringing Kim Thomas into this discussion at this time next week. We're still debating whether or not people might like to get myself, Kim and Vern sitting on a panel. And there is also the opportunity to bring commercial lenders into this process as well. So right now we're at webinar 2 and we're thinking through the lender's shoes. Okay, I'll set the scene a little bit more about the Lender Ready program. If you were in one of our business management programs, or if you are working with us from the point of view of our client work, this is the underlying principle from our perspective. It's an active process of creating a high-performing business, which is self-managing, so it helps you actually elevate yourself in managing your business in a manner where you can focus on the strategic issues and have other people gradually come behind managing a lot of the operations for you. Profitability goes without saying. We bring another element into this, which is salability and investor readiness, which is what this program is all about. And the notion of an investor is it might be a lender, such as we're talking about with Vern. It might be a commercial bank. It might be a family member. It might be high net worth individuals. Might be pension funds or whoever it might be. But fundamentally, what underpins that notion of becoming a high-performing, self-managing, profitable, investor-ready, saleable business is business best practice. So we have our 12 pillars of business best practice, which I'll touch on later, but it's helping you think through how you can actually create a more profitable business, which is a wealth creation entity. So in order to do that, inevitably, somewhere along the lines, extra money is going to be required, I would imagine, to help run your business and build your business. And for most people, having some kind of assistance, which is this Lender Ready program, is quite helpful. So I'm going to move on to the focus of last week's webinar, just to remind everybody where we're coming from. So if I was standing in many of the business owners' shoes here today, they would be talking about this idea of the optimum result. Inevitably, they would be thinking from the point of view of what's the best rate that I can get? And we would observe the terms and conditions of your loan is also very important when you're thinking about that optimum result. And you'll see there on the bottom right-hand corner the idea of suiting you. So what are those 6 principles? Let's just recap briefly. Pardon me. So here you are, understanding the constantly changing lending environment. That's critical. It's very important for you to be clear on what your plan of attack is, and that's actually what Vern will be talking about today, because you've got to gain your lender's confidence in your plan. You've got to be committed, pardon me, to the effort and discipline that's required to create these documents. And for many of us, it's somewhat confronting if we're not that administratively competent or confident. And understanding that this is a proposition that we are putting to the lenders. So in many respects, they're in a position of, we'll call it power, but actually what we're looking for is a collaborative arrangement, pardon me, to engage with the lenders, because essentially this will be a package arrangement. The ultimate element to get an optimum result is to be in a position to understand things enough where you can actually assess the proposition that's put on the table to you. And these are the key elements that are behind this idea of the Lender Ready program. So what we're doing here is setting the scene and starting the journey around this kind of self-help notion of getting a better optimum result in terms of rates, terms and conditions. Our agenda today is to think about the next step, as I said. Item number 1 is let's get some insights into what Vern's thinking, or Curator's thinking, or what a commercial lender might be thinking. Inevitably, they're going to want us to tell a story. And so we're going to ask Vern a little bit more about this story and business plan. Inevitably, they're going to ask us to put forward a financing or financial proposition and a financing proposition to validate the plans. This all gets wrapped up into a package, a whole heap of documents, which we're also going to touch on. And then ultimately, we'd like to think that you're in a position to go, this is the proposition that I'd like to put forward to a lender. And in the case of Curator, Vern will probably explain that there are certain principles on which they work. and certain principles on which commercial organisations work as well. In thinking this through, and I'm going to ask Vern to comment in a minute, we're going to talk about the size appropriate nature of all of this. It's got to be fit for purpose. Understand that there is money available out there in the marketplace. So if you put your best foot forward, that's where the optimum result comes from. And you may well decide to go to the market and talk to a number of lenders to find out what this optimum result will be. But fundamentally, the plan and the financials are critical. And there are a couple more webinars to come. So, Vern, before we move on into the agenda proper, would you like to comment on this idea of the optimum result and maybe why it is that we're setting the agenda up the way we are?
Well, I guess it's the optimum result, Gordon, varies from customer to customer, client to client situation. No one size fits all.
Sure.
And there are so many things involved in that result. The first one that comes to mind generally to the applicant is the rate.
Yeah.
But whilst the rate's important, and today we're looking at all-time record low rates. I've heard commercial rates down with 2% in front of them. Q-Rider is a regulated lender through the government, so our rates are somewhat cheaper than that. About 1.7 is our 5-year rate at the moment in round figures. But what you need to accompany with that consideration of rate is the terms and conditions. What, from a commercial point of view, what lending covenants are around that. So what you need to achieve in your business and they range from interest rate cover to profitability to security type conditions as well, and the term of the loan. As I said, and a lot of that from a commercial perspective is up for negotiation. And banks, commercial lenders look at it typically from a risk and reward point of view. Q-Rider is more rigid than that. We have government guidelines and regulations that are set by the government. So there's not a lot of wriggle room in our terms and conditions. How we do match them to the proposal that's put forward to us, and that's why it's important to have that true story and that true package of what you're actually trying to achieve. So we can, whether we're a commercial lender or Q-Rider, we can match our offer to what you're trying to achieve.
Look, that's absolute gold, Vern, because I mean, you've given us some insights into the lending environment. So understanding the changing lending environment and also giving us some very good insights into what's on your mind. So let's move on now in terms of getting people who are listening and so on to this webinar thinking about how do we stand in a lender's shoes. So in this first part of the agenda, we've talked about the changing marketplace. We've talked about the changing policy position across commercial and even government lenders from that perspective. We've made a comment here about certain policies and so on, return on investment risk, which you've started to touch on. And we've talked about this lending decision, so that understanding who the lender is that you as an aspiring borrower might go to. And Vern actually asked me to put these 4 elements into this slide here as well. So if we kind of look big picture, Vern, what's, I suppose, your personal comment on these points that are here and why you asked me to put them there?
So the commercial versus government, we've probably touched on that with the regulation compared to actual credit policy. Even though credit policy for the commercial lenders is under more and more scrutiny from the likes of APRA and being the regulator. So, and that is a constantly changing environment. We've seen with the banking inquiry, commercial lenders pull back from the market, and then been a lot of comment with the impacts of COVID that those lenders should now release the reins a little bit and let the funds flow. And also for commercial lenders, return on investment is important from a profitability point of view, and of course the major players, they're interested in return on investment of the shareholders.
Yeah.
And you've got the constant risk and reward. Not that QRider is oblivious to risk and reward, but it's a lesser topic to us. And the most important thing is servicing the debt. So, and not only repaying interest, but also being long-term, being able to repay the principal. Because we can't, we're at record low rates. When I started in this business, we were in the low to mid 20%. I think everyone's quite happy to forget about that.
Absolutely.
Now we're, as we indicated before, we're in the low 2%. So work out the maths here at Bank of Vern, it's a hell of a reduction, 80% reduction in the cost of interest. If we have a 2% increase, we've got essentially 100% increase in our interest costs. So we need to be able to repay that debt over the longer term. So moving to the four elements, I've always looked at the gaining of finance as a team effort. Often when you're looking to expand your business, you're looking to bring different structures in place. It may be family succession, it may be business partners, and there are a range of things to consider. So bank, yes, early engagement of the financier is essential, but also probably earlier engagement is you, your family and your business partners to fully understand what all parties in that partnership, whether it's brothers, sisters, children, even grandchildren, that what their expectations of the enterprise are in the short term, medium term, and the longer term. And then we come to solicitors and advisors, accountants, so the technical people that will help you put those structures together, whether it's for asset protection or whether it's for managing cash flow and ultimately succession planning.
Okay, thanks, Vernon. Well, look, let's move on. So the second thing that we propose to do, and we've got two slides here, is to, as I said, we're standing in the lender's shoes. So I've asked Vern to give us some insights into some of these key things that he wants to focus on, and any lender would be focusing on. And the first thing is that there's a lot of wording here, but maybe Vern can speak to it. The first thing is about the resources that are available to make this assessment. And you can see all those dot points there. The second thing is the financial position, as Vern said, to be able to repay it. So maybe Vern, if you could just range over those points and maybe pick out some of the key things while people are reading them on the screen as well.
So typically, commercial lending versus QRider, I guess we start there. QRider, we are essentially a Brisbane-based enterprise. We do have regional representation that assist they're designed to assist the applicant communicate their plan to an assessor based in Brisbane. So the assessor doesn't have the luxury of going on farm, but we are a production-based assessment and credit assessor organisation. So it's important to us to understand the property, the enterprise, its productivity, what farming systems use, is it zero till, minimum till, what your target markets are, that sort of thing, plant and equipment that's required for the enterprise, because if it's a cropping operation, you've got a lot of capital tied up and you need the correct equipment. Labour, so labour is always very topical, and in times of COVID, we see the fruit and vegetable producers really struggling to attract labour. So what is the availability of labour? Is it family or staff? Capital, we're a project lender being QRider, so we fund the acquisition of the property, but we don't fund working capital. So if there's a working capital requirement, have you got that on hand, or are you going to access that from a commercial bank? And then coming to the repayment ability through cash flow, we look at the key drivers of yields. So the yields that you're telling us that you're going to achieve, what's that based on? Is historical averages? Often it's a new enterprise, so we haven't got historical, so we use a range of tools to measure that. The herd structure, livestock, whether it's a breeding herd, a backgrounding operation, a feedlot, that sort of thing. So it's important to understand what that livestock situation is. Commodity prices, what impact are they going to have on the operation? How do you manage that pricing risk?
Yep.
Have you got the ability to manage that pricing risk? And what's the upside downside of that? Marketing strategies, we've seen that change over time with sale yards probably becoming less popular because of a range of issues. But what are your marketing strategies for your commodities and contractual commitments? So I joined a grain trading team back in the early 2000s where derivatives were quite popular, but then we saw the dollar change track to what it had done for the previous 10 years, which caused a lot of angst around and combined with drought, a lot of angst for grain producers in contractual commitments. That it was all good from one point of view, managing the price, but when we saw lack of production, it really caused some angst amongst producers. So how are you going to manage that?
So that's the whole risk discussion, I guess.
Right. Yes, that's probably the key to it.
Okay, thanks. So basically, cash flow, and I suppose you're starting to touch on where we'll be coming to in a minute, which is a true picture of the circumstances and ability to tell the story.
Mm-hmm.
So the points number 3 are about security, and here we're now in point number 4, starting to touch on the proposition, I guess. So yeah, any key points from this one, Vern, to, I guess, highlight? Well,
security is all lenders want to be able to secure their debt.
Mm.
It is the last way out. It's not the preference. Years ago, it was probably the preference. If you had security, you could secure the loan or you could obtain the loan. However, now it's really if the last mitigant. Cash flow is king. That's the first thing that a lender looks for to repay that debt. And then how are we going to secure it? So if everything goes against the operation and we need to get our debt back quickly, how do we do that? So the first one and the favourite one is obviously landed security, property,
sure.
real property. Tried and true. It's been increasing in value forever, and also at a very rapid rate recently. The second one is livestock, which again that secures the cash flow. Plant and equipment, if you're funding specialised equipment standalone, you can do that through asset finance or equipment finance, hire purchase, lease arrangements. So the infrastructure is really tied to the property and the land, and then guarantees. So because of some of the complex lending structures, what people need to be aware of is if you bring a trust or a company into play, it's like having a third party in the room to the lender. So the lender wants to wrap their arms around that asset that company or that trust controls. So they'll have guarantees from personal guarantees from directors, guarantees from companies to individuals, and it cross collateralizes it. Rights of entry, we see more and more where producers instead of purchasing land to run their operation on, are adjusting or share farming or leasing, all variety of arrangements. I think at a corporate level, you see rural funds management with large land holdings that are sublet to others.
Sure.
So to secure the cash flow, and if the business was to ultimately fail, the financier needs the right to enter that premises,
Okay.
either to take back the plant and equipment or access the crop.
And so, Vern, I guess before you move on, this is what's sort of critical as we go through all the due diligence processes from a borrower's perspective, and explains why lenders ask questions about these sorts of things.
Correct.
Yeah.
And it becomes quite complex. And in people's, because people employ advisors, accountants, solicitors to set up the structures, and often they don't fully understand.
Yeah.
So it is important that it's not uncommon. So you just need to, that's that early engagement piece, because what one of your advisors may want may not be suitable to the lender from an asset protection. I think, as quite bluntly, as one accountant told a client in front of me one day, we can set up all the asset protection in the world, but there's no asset protection from the bank.
Yeah, okay. And Vern, I think what's important here about this discussion, or these points, is part of what we're doing with this Lender Ready program is helping people figure out what they don't know.
Mm-hmm.
And I think what you've just described now, because I've been down this track a couple of times with clients, which is, why is it that the bank is asking me all these detailed questions? Well, you've pretty much answered it there with a number of those dot points.
Mm-hmm.
So let's just continue on. We will be coming to the business plan in a minute. So maybe there's some high level points about number 4 here, the best case, putting your story across, I guess, to present yourself to a lender.
Yeah, so the track record, quite often we get new entrants into primary production, or young children of primary producers that want to enter the family business. So we need some sort of track record, particularly if it's haven't been involved in the business. So what is their understanding of the production system? A lot of those things we just talked about. So what's their learning curve?
Yeah. And
to have a track record of saving, quite often, well, just say, you need some sort of deposit. Yeah. So saving is a good thing, and it may be saving maybe in the form of commodity assets such as cattle, livestock, plant and equipment that you've developed, purchased along the way. And then planning and preparing. So, did you just wake up today and decide that you wanted to buy a farm?
Mm.
Or have you been working with your family and your advisors over a period of time?
So I'm guessing that's to do with that kind of knowledge and business networks as well.
Correct.
You want them to demonstrate their knowledge, and if they don't have knowledge, where are they going to readily get it from, or are they part of the advisors, the business networks? Are they part of the thinking?
Exactly. And yes, because now probably primary production is to a certain extent less hands-on, and more of a project manager, because you've got that raft of things that we've talked about, production, marketing, all finance that is the topic of today. So you've got a lot of things to manage. There's a lot of moving parts to an agricultural enterprise. And you can't do it all yourself. And typically we see, you've got contractors to manage, marketing agents, and financiers.
Okay.
And then the last one is the accumulation of assets.
Okay, I'm keeping an eye on time, Vern, so we probably better move on. I've just brought up this business plan template, and I might just speak to it very briefly. So I guess for those people listening, and this is a template that we habitually provide to our clients, and it's one that we go through with the Lender Ready program, and it comes back to the idea of that size appropriate nature of all these things, dealing with all of these matters, many of which Vern's already touched on, as you can see. But essentially it is creating the story under a series of organised headings, we'll call it. And it fits within this framework of where are you now? So this is a kind of a stock take. And it's, as Vern was saying, give us the perspective of where you're up to and what your level of expertise is now. Where do you want to take the business? So give us a very organised story, and how you're going to get there. and this idea of monitoring and review, which is a feedback loop. So effectively, the size appropriate nature of this business plan template is in fact a checklist to get you to think through all these points and be able to tell your story. So look, Vern, I might move on because I think it's probably important that we cover off this point number 2 around the financials. So this, once again, is one of the things that we cover off in our business management programs and will be part of what we deal with in the Lender Ready program. But I know there's a few things in here that you wanted to touch on as being quite critical from a lender's perspective.
Yes, thanks, Gordon. So I think the financial basics is what it is, but understanding how just the nature of interest and the interest rate clock never stops ticking. The budgeting and forecasting, and that goes hand in hand with monitoring and evaluation. So a lot of people say, well, what's the point of putting a cash flow together? If it rains today, it works. If it doesn't rain today, it doesn't work. But we've got to have some sort of benchmark and plan going forward to think that this shows how this operation is actually going to work. And then from those budgets and forecasts, we can actually develop the financing package that's going to be appropriate to the customer. So that's why it all keys together. The advanced strategy and risk is probably more around, when you get into more complex structures and complex operations that want to take advantage of risk management strategies such as forward pricing and derivatives and that sort of thing.
And part of our thinking with that too is that's telling the story about where you're going to take the business to from here.
Yeah.
So let's just continue on there. There's a couple of slides here that are coming up. The first, and they fit under this financial mutual obligation concept, which you were keen for me to cover off. The first one is about, we'll call it application forms, which is about the plan. So we've got our business plan template that we've touched on. Then in a minute, we're going to be going to the cash flows. So maybe key points you want to cover here with a plan of attack, an application form.
Well, the application form to QRider is the crux of the story combined with what we call a business plan. And it's all about communicating what you want to do, what your business is today, where you want to take it to, what will happen by when, and who's going to make that happen, and then creating that discussion and communication piece with your financier to sell the story. And and the questions that the financier are, well, will this work? Can this guy do what he says he's going to do? What are the implications if it doesn't quite happen? And while this is all, typically primary producers are really good at operational. They love their cattle, their sheep, their cropping country, their land. They're very connected with it. Their paperwork is probably a second thing. And I think one of the programs I was involved in at one stage, the producers were quite frustrated about the amount of paperwork. And I used to come up with the saying that, well, just think of it like this: it's worth $40,000 a page to you.
Hey, look, that's a very good point. It comes back to that idea of the optimum result. If you put the effort in, there's also that whole saving, if you do it properly, potential savings of cash as well. So Vern, I mean, the other thing I guess that people find a bit frustrating or challenging is this idea of cash flows and the spreadsheets. So again, we're back to financial mutual obligations. So what are your thoughts about some of these key principles behind, we'll call it, doing the spreadsheeting to give you a story?
So the cash flow tells the financial story. It tells it that, combined with cropping production schedules and livestock schedules, shows us how, as the name indicates, how the cash is going to flow through the business, what the income is, what the expenditure is, and we look at that over a 1 to 3 year timeline. Also compare it to previous financials, if there is a track record, or industry benchmarks if there's not. And from that cash flow that the applicant develops for us, we actually develop and agree financial mutual obligations.
Okay.
So milestones, and they might be production milestones, e.g. achieve having 1,000 breeders in 3 years' time, or having 1,000 hectares of cultivation developed.
Okay.
So it all links back to the production and tells the production story on a spreadsheet.
Okay. And we'll move on, but as we do, the point that I've heard many lenders, particularly in the commercial space, say is it's tell the story, stick to the story, annual review time, you have to demonstrate that you really are on track or you have good reasons why not. We've got, I guess, a couple of key points to raise. All the work that we've been talking about so far is dealing with the idea of a finance application. We've got the business plan we've talked about the financials. The business plan from my perspective is, what is the grand plan? Tell us the story of how it's going to play out. Vern's talked about the idea of a 1 to 3 year horizon, and from our perspective, we'd like to see the business plans and the financials all absolutely aligned. Then we've got the whole assets and liabilities issue that Vern's talked about as well. And fundamentally, we propose that there has to be a good reason why you want the level of finance that you do. So I'll cover off the remaining points and get Vern to make his comments about them from a lender perspective. So from our perspective, this has to be a real story. As Vern said a minute ago, get all the people in your business together, get a clear picture, and define exactly what the plan is and how it's going to work. Then think through who's going to do what and how will you demonstrate that it's on track, and that's what's on the left-hand side there. Think about what could go right, what could go wrong, and think also about how the money flows are going to happen, and ultimately the end game is going to be turn it into profit. And how are you going to report on progress as well? Because inevitably a financier is going to say, I need you to give us how things are tracking. So Vern, that's my terminology. What's your take on those points?
Well, the plan is a communication tool.
Sure.
As we've said, it's what you want to do, how you're going to do it, which is how and when, and who does what, and that's very important for the lender to gauge. Well, what intellectual property resources have you got available, as well as physical resources? And then lenders monitor, so is it on track? Are we going to achieve it? So hence an annual review. Some lenders do, in certain circumstances, review more regularly than annually.
Yeah.
Because they want to keep a tighter rein or a tighter check on things. And the risks, yes, what goes right, what goes wrong, and inevitably we've got Mother Nature and seasonal conditions. Things change. So if they change, the important thing is, if something does change, tell your financier. Communication is the key to this thing from the day you decide you want to expand your business or enter business until the day that you don't.
Okay.
And it changes every day.
So Vern, we'll move on. A couple of points I want to draw from what you've just said is this idea of accountability, I think, is very important. In our experience, a number of the clients that we've worked with have said they actually kind of, on the one hand, it's more admin, but on the other hand, the idea of self-accountability and talking this stuff through with the lender is very good from their perspective, because it actually helps keep things on track as well. So I think that's kind of an unseen benefit of the sort of processes that we're talking about. So we're in kind of the final stretch before we move to Q&A. So we've developed a couple of take-home messages here if I stand in Vern's shoes, which he'll report on in a minute, have a plan, show the lender the plan. How's it going to work? There are people in the background who need to actually read the plans and figure out how it's all going to play out and define what the margin of safety is and be conservative, because an outlandish plan versus one that's going to make sense will be far better thought of. And then ultimately, the objective is to have a well thought through plan that makes sense, that is conservative, but will actually provide confidence to a lender. So those take-home messages are in my terms. Vern, maybe you could give me your take in lender language.
So the business plan is the communication tool that you, the applicant, can use to show the lender and how this whole thing is going to come together and work. And then the lender's job is really a facilitator to take that plan and communicate it up the tree to people that need to make a decision. It is getting more less common for a frontline lender, e.g. a bank branch manager, to have a lending description. So and that's been brought about by changes in credit policy and more regulation and more oversight by the regulators of financiers and by the financiers themselves. So it's simply a communication tool. And we, myself, I'm probably in the unenviable position. Sometimes I'm actually a decisioner.
Okay.
In my current role, but I did spend a considerable amount of time at the front line, just being that facilitator and that communicator of somebody's business aspirations, their wants, needs, and dreams to a certain extent, to get that to someone that could say, yes, we're prepared to back this person and we're prepared to provide the capital that they require.
Okay, thanks. So we're drawing this to a close now, and I guess I'm planting the seeds of questions in people's minds. So if I put myself in the shoes of maybe some people listening here, the questions that we're keen for you to maybe ponder or you provide us with your own questions is, can you define your business plans clearly already? Can you define your financing plans? Are the next steps in your journey of getting money clear? That's why we've got this program that we've developed. We've got webinar 3 coming up next week, possibly webinar 4. If you'd like to see that happen, we can create a panel for you all. And we've actually done one more thing, which for those people who attended last week, we've actually provided you, and whether you like it or not, you're going to get free access to a business best practice short course coming into your inbox, because what I think became apparent to me after last week was this kind of idea of a business best practice is a bit of an unknown to many people, and we just thought, look, it might be a nice thing to do is to provide that opportunity to people. So if you'd like to find out more about the Lender Ready program, we will send you an email update as a result of this program, and so will Greg, and so we'll provide some details there. You've also got my details, and ultimately we can put you in touch with Vern as well. So quick point before we move back to the Q&A side of things for Greg to manage is clearly, like all of these advisory things, it'll be important for you to get your own specialist input for your own circumstances. But we've actually developed this Lender Ready program to help you figure out what you don't know, and develop the data and documents